Hi everyone. Okay, so this video is going to be a little bit unorthodox. I did not warn you guys. I'm going live earlier than I normally do when I'm on my Thursdays. I was actually trying to, I had this really fancy animation that I wanted to do for today's video, and I can't get it to work. And my technologically advanced hubby is gone to church. So it's just me and this laptop here and my little 401k animation, and I can't get it to work. So I am going to, I'm just going to fly by the seat of my pants because I wanted to get this video done before it got too late. So thank you guys who have already joined. It was brought to my attention by my sister who watches my videos. She's an avid supporter, so shout out to her. She knows who she is. Thank you, boo. Today is National 401k Day. Very rarely in insurance do we get like national days to celebrate. So excuse me for being an insurance nerd today, but it's National 401k Day. So I did some very specific research for this video. I am in the health and benefits insurance world, but I am not full blown into like the financials of everything. So I wanted to make sure I had all the right information for this video. So I'll try to keep it cute and sweet, but I will be looking at my notes just so you guys know. So retirement is the one time in everyone's life where you get to kick back, relax, and reap what you've sown into your labor years, right? I mean, that's what we all hope. We hope that we can live under the shade of our nest egg when it gets to the retirement phase. So National 401k Day is designated every year as a day for 401k plan sponsors to give employees information and communication about ways that they can save for retirement. So today happens to be that day. This year, hopefully your company, if they have 401k, has given you some information. But if they didn't, today you will get a little bit from me. Okay, your 401k is one of the best savings vehicles around for you to be able to save for retirement. Okay, employees who work for a private or a for-profit company will likely have access to a 401k plan. If you work for a public company or a governmental agency, you will likely have access to a 403b, 401k. If you're private or for-profit company, I am stumbling over my words, or 403b if you work for a public agency or a governmental agency, okay? For the sake of this video, we're going to refer to everything as a 401k. Most of the information we cover in this video is the same between 401k and 403b. There are some differences, and you want to make sure you talk to your plan sponsor about the benefits and values of whatever the plan is that your employer offers. Okay, with the 401k plan, you choose how much to contribute through convenient payroll deductions. Now, with the traditional 401k, your payroll deductions are pre-tax up to the IRS limit. And that means that the savings that you put into your account come out of your check prior to your state and federal income taxes coming out of your check. That means that you get to bring home more money because you are lowering your taxable income by putting money away pre-tax into a savings account for retirement. This leaves more money for you to spend if you need to on, the things you do on a day-to-day basis, and comfortably know you're putting money away for that nest egg later on in life. You also postpone your current income taxes on all of your investment earnings while your money remains in the plan. Now, that's a traditional 401k. With the Roth 401k, your money is put away into your retirement account on a post-tax basis. That means after your federal and state income taxes have come out of your check, that's when you put money into your Roth 401k. Why would someone choose a Roth 401k if they can put money away pre-tax? That's a great question. Well, here's the deal. Some people know that they may have more money coming in during retirement, at which case taxes would be higher at retirement. And so it may be better for them to to choose. Let me go back for a sec. To choose which plan you'll want to use, you want to assess whether you think you'll earn more money now or during retirement. Right. So if you can save now on a pre-tax basis, bring home more money, and you think that you're going to earn more money during your retirement phase, then you want to make sure that you put away your your money on a pre-tax basis now, so that you have less taxes that you have to worry about coming out. If you're gonna earn less money at retirement. If you're gonna earn more money at retirement, then you want to put your money away on a post-tax basis, because then you don't have to worry about the taxes coming out at retirement. So that's what it is. So if you put your money away on a pre-tax basis now, and you think you're going to earn less money at retirement, then your benefits at retirement will be taxed because you put them away pre-tax now. If you put them away in a Roth 401k and it's on a post-tax basis, then you don't have to worry about your benefits at retirement being taxed. So if you think you're going to earn more money at retirement, then it's a benefit for you to put the money away on a post-tax basis, so that when you get your benefit during your retirement season, you don't have to worry about taxes coming out. So that's the key. The difference between the Roth and the traditional. Traditional is pre-tax, Roth is post-tax. For those who think that they'll benefit more by not having taxes taken out at retirement, those are the ones who want to put money away on a post-tax basis. But if you could benefit from having more money come home now, then you want to put money away on a pre-tax basis, understanding there's a chance that you'll have to have taxes on the benefits at retirement. Okay, so I wanted to get that clear. Sorry for the confusion. You'll be glad to also know that your plan contributions do not affect Social Security, Medicare, or your federal unemployment taxes or benefits. So putting your money away into a 401k does not affect those items: Medicare, Social Security, or federal unemployment taxes or benefits. In addition to the advantages of having the taxes be pre-tax or post-tax, there's also an advantage that your employer can put money away on your behalf. Some employers choose to contribute to their employees' 401k plan. So you get money from your own savings as well as from your employer savings. Now, here's the key. There's a thing called vesting. So you always own the amount of money you put into your 401k. You're fully vested on the money you put into your 401k. However, employers have different vesting levels that you are required to meet in order for you to become vested on the money they put in. So until you're fully vested, you're at risk that if you leave the employer, you could potentially lose the money that they have put in your account. You won't lose your own because, again, you always own it. You're always fully vested in your own contributions. But if you leave the company prior to becoming fully vested with your employer's contributions, you risk losing some of the money that they put in. So if you are on a tier vesting setup at your employer, then you may be vested partially on a certain amount of money, in which case you will then keep that if you leave the company, but then you forfeit the balance that you're not vested on. But if you're fully vested or 100% vested with the employer's contributions, then you get to keep all of it, yours and the employer. So that's good to know. So you want to make sure you understand the vesting tiers that your employer offers if they contribute to your 401k. So you know what it takes to become fully vested, how long it takes, how much you have to contribute. That way you know when, not that you want to leave your company, but when you leave your company, you know how much you get to take with you with your 401k. Okay. Although the 401k plan is designed for you to save money for retirement, there is one other benefit I want to cover in today's video. The plan, your 401k plan, may also offer the ability for you to take out withdrawals or loans to help you meet your current financial needs. So even though you have the benefit of putting money away on a pre-tax basis and bringing home more money because you lowered your taxable income, if you still need to bring home more money for a specific situation, or you have an urgent need where you need to tap into your 401k, many plans offer you the opportunity to make withdrawals to help you meet your financial needs. Now, there are penalties if you don't pay that money back. So you want to make sure you talk to your plan sponsor about how do you take out a loan. Most plans will let you pay the money back from your paycheck so that it just comes out automatically, pay back into your 401k plan, and you don't have to worry about that. But it's very important that if you're going to access your 401k funds, that you talk to your plan sponsor about how the loan works. So you want to make sure you're paying it back so you don't incur the penalties or fees associated to taking the money away or out of your account prior to retirement. Okay, so key takeaways. I've covered a lot today. I think I talked pretty fast today. Sorry, that's kind of just how I talk. I'm excited because it's National 401k Day. I wanted to do an animated video. Couldn't get that for you guys. If I get it to work, I may post it later. In the meantime, hopefully this information has been helpful for you. Key takeaways. If you are enrolled in a 401k plan, you'll want to make sure you review your plan materials to ensure you understand everything. Make sure you understand all the details, how loans work, how vesting works, how putting money away works. Is it pre-tax? Is it post-tax? Is it a traditional 401k? Is it a Roth 401k? Is it a 403b? You want to make sure you talk to your plan sponsor and understand and review your plan materials before you begin investing. You also want to make sure you understand how your money is allotted once it's in there. You get to choose if you want to go aggressive, with the aggressive investments, or if you want to be more conservative with your investments. But you get to choose it. You want to make sure you understand how those choices are made and what types of investments are happening with your money. So all of that information can be found in your plan materials and by talking to your 401k plan sponsor. Okay. Also, if you have a 401k option available to you, invest in your retirement as early as you can, especially for us millennials who feel like we got forever before we retire. It really does feel like we have forever before we retire, but it's really not gonna feel like forever when it gets here and we don't have money put away. Okay, so it's very important that we understand how quickly retirement can come, how important it is to have a nest egg saved so that you can have that time to relax. We all work very, very hard during our labor years, so we want to make sure in our retirement years we're able to relax. So put money away in a nest egg to help you be able to retire comfortably, and have money put away for savings. Okay. Don't be afraid. I say this at the end of every video. Don't be afraid to ask your HR questions. Don't be afraid to ask about the plans that are available to you, what options you have. Make sure you ask questions. Okay. Today's video was early, so for those who joined, thank you. Again, hope this was helpful. If I can get my video with my animations to work, I will post that later on. But otherwise, happy Friday. Hope you guys have a great weekend. Don't forget, like and subscribe to my Instagram page at what_the_insurance. Also, you guys can follow and subscribe to my YouTube page. The link is in the description and below. All of my archive videos are posted to YouTube and Instagram. Share the link. Tell your family. Tell your friends. Enjoy your weekend. Join me next week. Thanks, guys.